Enterprise AI has graduated from being an experimental tool into a highly complex network of autonomous threat vectors. Positioning itself to manage this transition is the incumbent cybersecurity leader, Palo Alto Networks. This table of key financial metrics shows the company's Q2 2026 results. Total revenue reached $2.59 billion, but the primary driver of investor sentiment sits at the top of the ledger. Next-generation security annual recurring revenue surged 33% to $6.33 billion. This metric, known as NGS ARR, excludes legacy hardware sales to track the precise trajectory of the company's high-margin software and subscription services. Palo Alto Networks uses this software trajectory to pivot away from hardware, generating the cash flow needed to fund an aggressive consolidation strategy. Most chief information security officers currently manage a fragmented network built on dozens of disconnected, specialized point products. Palo Alto's strategy is to replace these fragmented tools with a single, unified ecosystem, a process the company calls Platformization. Over 1,550 large enterprise clients are now platformized customers, meaning they have committed to multiple pillars of this unified ecosystem. This shift creates significant operating leverage. For the third consecutive quarter, non-GAAP operating margins have remained above the 30% threshold. These margins are maintained by replacing manual intervention with automated, AI-driven security delivery through platforms like Cortex XIAM. This software engine provides the capital for a targeted M&A strategy designed to capture the infrastructure of agentic AI. The priority for security has shifted from protecting data at rest to governing autonomous, non-human agentic AI workflows. To build a stack specifically for this era, Palo Alto Networks executed an acquisition triad totaling $28 billion. The $25 billion CyberArk acquisition applies strict privilege controls across both human and machine identities. Chronosphere, acquired for $3.35 billion, functions as a telemetry pipeline that ingests massive AI data volumes while minimizing infrastructure costs. Finally, the $300 million COI security deal pushes defense mechanisms to the endpoint to govern autonomous agents directly. This consolidation deepens the company's research and development footprint in Israel, a critical global cybersecurity hub. This triad shifts the company's core architecture, moving Palo Alto Networks from a perimeter firewall vendor to the underlying infrastructure for enterprise AI operations. Despite this strategy, the market faced a period of skepticism in early 2026, following the release of Anthropic's Mythos AI model. Mythos triggered a fear that autonomous large language models could eventually bypass traditional security vendors. Shares of Palo Alto Networks dipped roughly 6% as investors questioned if specialized AI models would render legacy platforms obsolete. However, the quarterly data remained strong. Non-GAAP earnings per share came in at $1.03, beating the 94-cent analyst estimate. To stabilize the stock, CEO Nikesh Arora made a $10 million open market purchase at approximately $146 per share. This personal investment signaled confidence to institutional investors and helped halt the downward pressure on the share price. Analysts at Wells Fargo and Macquarie subsequently highlighted the valuation as a favorable entry point for long-term investors. Arora successfully framed the company's precision AI as a defensible barrier that uses machine learning to neutralize AI-driven threats. With the conceptual strategy approved by the market, the focus has shifted to the practical risks of building a unified platform. The first risk is integration. Palo Alto must technically consolidate CyberArk and Chronosphere without compromising its 30% operating margins. Second is the competitive landscape. Specialized point product vendors like CrowdStrike and Zscaler remain deeply embedded in many enterprise environments. Some clients also resist vendor lock-in, choosing to manage multiple best-of-breed competitors rather than centralizing their entire security posture with a single provider. Third is capital expenditure. This risk is balanced against a broader shift in the industry from AI capability to AI governance. While capability uses machine learning to block threats, governance requires the continuous auditing of autonomous software agents acting on behalf of a company. Global regulators are already moving to mandate strict liability and security protocols for any enterprise deploying these autonomous systems. Prisma AIRS and Portex XIM are designed specifically to provide the foundational compliance infrastructure these regulations will require. The market's long-term benchmark remains the company's goal of reaching $15 billion in next-gen security ARR by 2030. If the platform can drastically reduce the mean time to repair for its customers, the current stock price will likely be viewed as a floor for future growth. By combining 30% operating margins with a $28 billion acquisition triad, Palo Alto Networks has embedded itself into the structural requirements of the autonomous AI economy.